Hello traders, my name is Gregor Horat and welcome to a new intraday video, which I decided to record it because it's so important based on current price action on euro dollar. Okay, so in this video we will be we will go through impulsive waves and corrective waves. Okay, so as you know, impulsive waves are 5-wave patterns. Okay, so just let me label 5-wave patterns very quickly here: wave 1, wave 2, wave 3, wave 4 and wave 5. Okay, so this is how a 5-wave pattern looks like. Okay, you can see first move down in wave 1, then you get a wave 2 pullback, which obviously must not move beyond the start point of wave 1, then you get the wave 3 down, then wave 4 pullback, which must not trade into the territory of a wave 1 or wave 2, and then you get this final push down in wave 5. Okay, so this is called an impulse wave. It typically represents the larger trend, and they unfold very fast. Okay, so if you see fast move, well, this is your primary direction of a trend. This is the direction in which you would be interested to look for trading opportunity. Okay, because you obviously want to look in the direction of a larger trend. Well, on the opposite side of this, we have corrective waves, okay, counter-trend movements. Well, corrective waves are typically very slow, very choppy, and overlapping. Okay, more importantly, they cannot be counted in 5 waves, okay, because you have these several overlaps. So this move typically represents part that is actually it's a move that is part of a larger downtrend, okay, of a larger trend. Okay, so in this move you will see typically a very slow and low momentum, very low volume, and the volume will really come back into the market when the breakout will occur. Okay, so if you see something like this, very choppy, very overlapping, then you may think that this is probably just a temporary move, because you don't see any significant clear directional movements. Okay, and if we check those two patterns on this euro dollar, then we can actually see that we have very nice textbook examples. Okay, and here, if we first take a look on this decline, I can see a very strong move in very short period of time. Okay, I think this was wave 1, wave 2, sharp extended wave 3, which is typically the case in a 5-wave movements. Okay, then we had a nice 3-wave pullback for wave 4, and then we got a final push to the downside, spike into wave 5. Okay, and you can see now that market since then reversed to the upside. Okay, usually when a 5-wave movement will complete, you will typically see a retracement back into the area of a previous 4th wave, which is here. Okay, before market turns bearish again. Okay, so this previous 4th wave represents an ideal resistance zone in this bear trend. Okay, so here we can see that this wave 4 is actually here. Okay, this is the wave 4 zone. Sometimes this pullback against this 5-wave decline will retrace just back to the middle zones of this wave 4, or maybe to the termination point of this wave 4, which comes in here. Okay, so we have room for a little bit higher levels, but more importantly, this counter-trend movement, okay, has all characteristics of a nice corrective price action. We can see very slow, very choppy, just let me zoom this, very slow, okay, very choppy moves here with a lot of overlaps. Okay, so at the moment I cannot count this impulsively. Okay, so if you cannot count this impulsively, well, then this is probably a corrective movement. Okay, and the reason why I think it's a corrective movement, it's very simple, because it does not look like an impulse. As I said, impulses are very fast, okay, very strong directional movements, while corrections are very slow and very choppy. And you can see here that from a time perspective, this move to the downside on the 4-hour chart was made in 58 bars, okay, while current rally is already at 45 bars, okay. So actually this move, which was what, more than 500 pips of decline in 58 bars, was retraced only for 200 pips, almost in equal bars, okay. So so based on a timing perspective, based on Elliott wave rules and guidelines, I think, and of course also based on the price action personality, I think that this market, the euro dollar, this rally is just a temporary, okay, and that sooner or later prices will turn to the downside, okay. On the intraday basis, we could also go to the smaller time frames and trying to identify the exact pattern of this rally, but I don't want to get into those details. I just want to keep it very simple here, okay. And this is, we had an impulse down, 5 waves of decline, and we have a corrective movement to the upside, which will typically stop at this region of wave 4, okay. So I think that sooner or later euro dollar will turn to the downside, okay. Of course, the invalidation levels for this wave count is here, okay. We know that any corrective movement must not retrace more than 100% of preceding 5 wave decline. So this is actually invalidation level, but as I said, based on the guidelines, I think that this reversal, and based on the timing perspective, this reversal is near, okay. I don't think that we will see any significant move to the upside. Okay traders, that's it for now, and I will catch you with some new intraday videos in coming days. Have a good day.